This market is ridiculous, folks. This stock market is absolutely ridiculous. Today was the last trading day of the month, and here is what we're looking at in the past month. The NASDAQ up about 11% in the past month. Russell, this small cap stocks up over 9% in the past month. S&P 500 up over 6% in the past month. Dow up 3% in the past month. That is insane, okay? Especially in regards to the NASDAQ and the Russell. Like those sorts of returns for a 1 month, ridiculous. This market's out of control, okay? A lot I want to take you through in today's video. A lot of stocks to talk about, a lot of earnings to talk about. I got some very important things I want to kind of show you guys that I think everybody should be aware of in this market, because this is an absolutely insane market right now, and we're at a moment in time where this market is either ahead of everybody and it knows certain things that are going to happen that other people aren't seeing right now, or we're in a situation where this market's just doing this fake out rally. And we're going to talk about that in just a moment, okay? Hope you guys enjoy this video. As always, thank you every single person that has subscribed to the channel, and also thank you everybody that supports the channel on Patreon. If you're looking to join us on Patreon and see all the stocks I'm buying and selling in the portfolio in there, check out the pinned comment down there. Will also be linked in the description. And also, just so you guys know, in the next 24 hours, I'm going to share the link in there. So basically, everybody that's in the Patreon, you can enter the giveaway, which basically we're going to draw a name and somebody's going to win a private group membership into the private stock group and the private wealth group. And we're actually going to do that every single month moving forward for the Patreon members, okay? So, market's going a little wild here, okay? Check this out. I'm just looking at some of the stocks I personally own and what they've done over the past month. Tesla, 55%. 55% in the past month. Fubo, 43%. By the way, Fubo is Google Trends. I was actually looking at it last night. I hadn't looked at it in a while. Looking really, really good, okay? I mean, even coming off those highs that we had back in kind of September, October, like still tremendous, absolutely tremendous. And you know, if you pull up a 5-year on Google Trends for Fubo, it's looking really good. Obviously, they got to fix their cash flow situation, their profitability situation, but the Google Trends is looking tremendous. Shopify, 40% in the past month. Oatly ain't no jokely, 28% in the past month. Palantir, 22% in the past month. The only thing that would be better than 22% is 22.22% for Palantir. Meta, 21% move in the past month. And Corsair, 15.5% move in the past month for Corsair, okay? I want to tell you guys something important, okay? Something extremely important, because if we go back to March, April, May of 2020, okay, the market obviously went down very, very rapidly, right? And my belief was, so I held through in that situation, right? I held my stocks, and as we started to come out, I even started buying some stocks. But it was very uncomfortable feeling for me. I actually even had thoughts, even in this period, of maybe I should sell everything, okay? And I do know some people that did. And the reason is I was like, there's no way the economy is going to be good anytime soon. There's no way earnings are going to be good anytime soon, right? But meanwhile, the market was just going up and up and up, right? And so I stood there and I was like, man, I'm happy I didn't try to time this thing out or something like that, because, geez, we're going up, right? But I was like, it still doesn't make sense, because earnings are garbage right now. Like, they're going to have to be garbage for a bit here, right? But the market was right. Starting about 2 quarters later, earnings turned around for companies. And for some companies, they started all of a sudden having record earnings, record revenues within 2 to 3 quarters after the whole situation had started, right? And there was just a moment in time where I was like, damn it, the market was right. Like, the market was ahead of everybody. If you go back to that time, March, April, no one was talking anything good about the economy. No one thought earnings were going to come back even remotely close to as fast as they did. If you watch any CNBC, if you watch any opinions of Wall Streeters, the most experienced people in the market, 30, 40, 50 years of experience, right? None of those folks ever saw coming what came after that, right? And earnings getting right back on track, and some companies being at record highs within a few quarters from that, that was absurd, like completely absurd, right? But it happened. And the market was ahead of everybody. And so I tell you this story because when you see the market bouncing like it has bounced, right? A 10% plus move for the NASDAQ. The important thing to remember is you don't know where the economy is going. You don't know where these companies' earnings are going. This could be just a little quick rally and we're back down, or this could be the start of the next bull cycle, and actually starting in 2 to 3 quarters from now, earnings are going to be great again. And next thing you know, you're going to be looking and it's like, wow, the trough for earnings was kind of Q4, Q1, Q2. and Q3, Q4 started to show more strength, and as you go into 2024, you show even more strength, okay? So I don't know what the result is. You don't know the result of this. No one can tell you. We can all guess. We can all throw darts at dartboard. But it's important that many times the market gets it right. And we don't give enough credit for that. The market's usually playing 6 months into the future. It's usually playing a couple of quarters into the future. Same exact thing happened in 2009, where the market bottomed, the economy looked awful, okay? Company earnings looked awful, but 2 to 3 quarters after the market bottomed, around March of 2009 or so, it was either February or March 2009 if I recall, next thing you know, 2 to 3 quarters later, companies started reporting decent earnings, and they started getting a little better. Rather than things getting worse and worse, they actually started getting a little better. And so the market many times ends up being right. And as we witnessed, what did we witness in 2022, right? Well, the market, for the first 6 months of the year, went down massively, epically. That was one of the worst first 6 months of a year in 2022 we've ever seen in history, right? But think about this for a moment. The market was 100% on. Earnings during the first 6 months of 2022 were incredible. It was like record revenues and profits for most companies out there, right? At least the biggest of the bigs. But damn it, they were right on. Because look at how weak a lot of these companies' earnings have been over the past quarter or so, and likely will be next quarter and the following quarter. So the market was right again. The market plays 6 months, sometimes 9 months in the future, and damn it, it gets it right almost every freaking time. It's incredible. And so I'm not going to say, we're good and this is the next major bull cycle we just entered into, but I'm just saying it's not out of the realm of possibility, because damn it, the market is right far more than it's wrong. Far more than it's wrong. So that's just important to keep in mind there, okay? Next up here, McDonald's. McDonald's, which I talk a lot of trash about this stock, okay? You know what, McDonald's for me is like Tesla for Jim Chanos, okay? The only difference between me and Jim Chanos is I don't have enough money to waste money on short selling stupid stocks. He does, okay? So that's the only difference between us nonetheless, okay? He's got enough to lose on these stocks. I don't, okay? So I don't bother shorting McDonald's stock, but I talk a lot of trash about this stock being overvalued. And what do? They throw it in my face. They beat on revenues. They beat on adjusted earnings per share. They kill it on same-store sales, 10.3% versus 7.6%. International operated market same-store sales, 12.6% versus 7.5%. I'm looking at these numbers. I'm like, oh my gosh. Yeah, the stock's overvalued, but my goodness, the earnings are actually pretty darn ridiculous. You know what I said? I said, damn it. I'm gonna go to freaking McDonald's for lunch. That's what I said I'm gonna do, okay? I'm gonna see what's going on here, okay? So I asked my wife, I said, hey, you want McDonald's for lunch? She started doing jumping jacks, backflips. Yes, is it my birthday? Yes, please, McDonald's. It's the greatest, okay? My kids were like, oh, Daddy, McDonald's, you could be the best dad ever. And I was like, no, we don't have enough money for you children. So I just got her an iFood. But nonetheless, okay, here in Vegas, I guess they put McDonald's with Terrible's gas station. So yeah, I took the Model X into the McDonald's drive-thru. First off, tell me that fry is normal, okay? That thing was so long, it made me feel small. I was like, what in the world? Look at this thing. It's practically the size of the Tesla steering wheel. What in the flipping fly? I had to take a picture next to my 5-year-old. This thing's bigger than his whole head. It's bigger than half his body. Come on, man. You're telling me McDonald's is serving real food over there? What is this thing, okay? There's no potato that's big enough for that, okay? You want to know? Now I know how McDonald's is making so much dang money. You know how much this costs? Seriously, you know how much this costs right here? Take a wild guess. I'll give you a second, okay? All right, you got your number? This costs over $20. There's two Big Macs, a fry, and this little teeny McFlurry. What? Over $20? Are you flipping my flapjacks? Like, now I know why it's out of control out there, man. But that wasn't the worst part, okay? That wasn't even the most expensive part. The most expensive part was I think I curb checked in the McDonald's drive-thru my $5,500 wheels from Tesla. Not even that. After that, I had to get a quick heart surgery because I felt like crap. And you know what else? Oh my gosh! I felt literally. I should have just went to the Planet and got a big fatty, because I'm telling you, if I would have went to the Planet and got a big fatty, I probably wouldn't have been as sleepy and tired as I was after that McDonald's. I felt so lazy. Like, literally, this video is coming out like an hour or two late compared to when I eat Tattoo Chef, okay? Because I felt so freaking lazy. It wasn't even funny. Like, literally, I thought about scrapping this video. I was like, you know what I think I'm going to do? I think I'm just going to go play Madden. Because, I mean, it's been a pretty amazing past month in the market, right? And that McDonald's made me so freaking lazy. You have no clue. So, McDonald's reports these epic earnings. huge day in the market, and the stock goes down. That's what happens when you're an overvalued stock, which is what McDonald's is. It's an overvalued stock. So yeah, market's great today. They report epic earnings in all respect in the world. I called it, man. I told you this stock's overvalued. If this stock wasn't so overvalued, this stock would have been up 10% plus today. Literally, if this was at a normal valuation for where McDonald's should be, which is like a 20-ish PE, okay, 18 to 20 PE, literally this stock, you would have had a 10% plus move today. But because it's overvalued, they report just sick earnings on a great day for the market, and the stock goes down. So what happens when you're overvalued? And it happens to all stocks. Like it can happen to McDonald's. It happened to Tesla. I was one of the only Tesla, actually, I think I was literally the only Tesla bull to call it out time after time again, right? At the end of 2020, throughout 2021, like Tesla, like chill on Tesla, like this stock's going to be dead money for a year or two. And I said that time and time again on Millennial Money, on the channel, everywhere, right? And sure enough, I was 100% right with that call. It was dead money. It was dead money, okay? And now Tesla's back to live money again. And, obviously, recently it's presented a tremendous opportunity. But the problem with stocks is many times they get massively overvalued. And sometimes it causes them to stagnate for potentially years. Tesla got overvalued a previous time in its history as well. And that's why it went through 5 years of doing nothing. That's what can happen to stocks. And it can happen to any stock, okay? It can happen to a growth stock. It can happen to freaking McDonald's, okay? Doesn't matter what stock you are, you can get way overvalued in the market. And next thing you know, even if you report really good earnings, your stock gets a 1% gain, okay? UPS, very important earnings. Arguably the most important earnings if you want to know how the economy is doing, okay? Now, UPS went up on their earnings here today nicely, 4.6%, okay? There's some good and some bad in terms of UPS numbers here, okay? So the main thing you want to kind of pay attention to, there's a lot of things in regards to UPS, but in terms of trying to figure out the economy, look at UPS's revenue, okay? Now, for the overall 2022, UPS's revenue was up 3% roughly, so definitely wasn't a good year for UPS, right? And they did about $100 billion of revenue. But what did UPS say they're going to do in 2023 for revenue? Well, let me show you. They say they're going to do between $97 billion and $99.4 billion. So basically, they're expecting their revenue to be down, let's call it 1 to 3% in 2023. Okay. Now, that definitely shows you like signs of maybe a small recession in 2023, right? If you're talking about that sort of number. But what that doesn't tell you is it's going to be a disaster and we're going to have a large epic recession in this country in 2023, okay? And so, this is a company that obviously does business with just about anybody that sends anything around the United States and including international markets as well. So when you see an earnings like that, okay, I think it's important to understand that UPS is basically not signaling it's the end of the world. They're expecting 2023 to be not a good year, but not a disaster year, okay? And for this market, that's actually a huge sense of relief, believe it or not, a huge sense of relief for the market. The fact that this is like not a disastrous type year, at least from UPS's perspective for 2023, that's actually really, really good news, okay, overall. Now, also Whirlpool reported, which Whirlpool sells appliances. They own several different brands, Amana, KitchenAid, obviously the Whirlpool brand, Maytag. And as far as their earnings, they're expecting full year earnings to be $16 to $18 a share. Wall Street was expecting just under $16. So that's not disastrous either. Okay, so we're kind of like, this was an earnings period where we're kind of like, okay, we're going to have to get these disastrous earnings, but we haven't really been getting it, just to be quite frank. Like, you go through these companies and it's like, we get some decent, we got some decent. It's not like the end of the world type earnings whatsoever, right? Now, PayPal, thank you, Brendan, for sharing this in the private group Discord chat here. PayPal is going to lay off 2,000 employees, right? About 7% of their workforce. This is a much needed move for PayPal. Check this out. This is going to blow your mind, okay? PayPal in the past 5 years is up 6%. 6% in 5 years. This is PayPal. They own PayPal, they own Venmo. There's no reason why this stock should only be up 6% in the past 5 years, okay? But it is. It's at that stage, right? Which goes to show you, like, PayPal has real issues in their business, especially in terms of cost. They let costs get obviously way out of control, and it's hurt profitability, hurt margins, hurt everything across the board. And you're looking at this company, and it's like, dude, 6% return in 5 years on a stock like PayPal. You own two of the most popular finance-related apps in the world, in PayPal and Venmo. Like literally, like there's no reason your stock should be up 6% in 5 years, but that's the situation. So that's a much needed move from PayPal, as it is with many of these tech companies. And we see a lot of these tech companies doing between 5 and 10% layoffs of their entire workforce, right? Snapcrap reported after the bell. This might be the easiest money in the world. I mean, seriously, I swear every single time this freaking company reports earnings over this past year or two, what happens? Stock tanks. I swear, it's like never fails. It never fails with the stock. I feel like next earnings period is something that's going to screw with everybody, and so it's going to skyrocket like 20 or 30% or something like that, just to screw with everybody, right? Because everybody's got the plan down there. Because you see it every single quarter. Snapchat tanks 10 to 20% on earnings, 10 to 20%, right? And so it just starts looking like the easiest short in the world. So watch next earnings period, everybody's going to short the crap out of Snapchat going into earnings, and then watch it's going to move up like 20% just to screw everybody on the backside of that. But nonetheless, the stock goes down like every single freaking time in regards to Snapchat. And in terms of numbers, it wasn't necessarily a disaster. Q4 revenue, $1.3 billion versus $1.31 was expected. 14 cents of EPS versus 11 cents was expected, so a slight beat. As far as daily active users, pretty much right in line, right? Slight beat as far as that goes. The company also reported a net loss of $288 million, a stark comparison for net income of $23 million reported the same time last year. Looking ahead, this is very important. Q1 2023 revenue guidance suggests a decline between negative 10% and negative 2% year over year for their overall revenue there. So that's obviously troubling. It means Snapchat's expected to, have their revenues go down, at least in Q1, right? Which kind of shows you the weakness in maybe the ad market overall. Now, the interesting thing I think of this is you might say, okay, well, how's Meta stock reacting? How's Google stock reacting? Because in the past, when we've seen these Snapcrap falls, what happens is it boils over into Meta and Google, and many times the next day, Meta and Google can go down as well, okay? So what do we see here? Well, it looks like Wall Street's not quite buying it, and Meta shareholders aren't quite buying it. Because you look at Meta stock, it's down 1.2% after hours. So it looks like Meta shareholders like, it's Snapcrap. We don't really care. Look at Google McDougal. Google McDougal only down 0.6%. 0.6%. So it looks like Meta and Google shareholders like, I don't freaking care. I'm not selling my Google stock and my Meta stock anymore at this point in time just because Snapcrap reports disappointing earnings, okay? I'll wait for my company's report. If they report a disaster, then the way these shareholders looking at it, then they'll sell. But outside of that, they're like, I'm good on this, okay? AMD's doing a whole lot of nothing after hours. It's up about 1.7% as of right now because they just came out with earnings here. And in regards to AMD here, I mean, on a GAAP basis, it's not great, okay? Revenue was up 16% year over year, but that's really because of the Xilinx acquisition, just to be quite frank, okay? Gross profit was flat. It's not what you want to see. When you got revenue up 16% year over year, guess what? Gross profit should be up 16% as well, if not more than that, okay? Gross margin percent down 740 basis points. That's 7.4% for those keeping track at home, okay? That's huge. Operating expenses up 109%, likely because of the Xilinx acquisition. Operating income lost down 112%. You don't see a number over 100% very often, folks, okay? Operating margin percent down 28 percentage points. Okay, net income down 98%, and the most impressive number I've ever seen, earnings per share down an impressive 99%. Very, very well done, AMD. Very well done, okay? Now, what AMD likes to show shareholders really is their non-GAAP, right? So non-GAAP up 16% revenues, gross profit on a non-GAAP basis, right? Which is removing certain maybe one-time cost items or removing whatever the heck you want to remove. Okay, it's not that far, okay? But you do get to remove some things that maybe you're saying like this isn't a normal thing, okay? Gross profit up 18%. That's something we do want to see, right? But really we want to see this on a GAAP basis over time. Gross margin percent up 70 basis points. As far as operating expenses, up 45%, still not great, right? Operating income down 5%. Operating margin percent down 4 percentage points there. It's a big number. Net income flat, earnings per share down 25%. Why is that? It's because they did a huge Xilinx acquisition. So when you do that acquisition like that, right, and obviously they issue a bunch more shares out there, even if you have flat net income, your EPS is epically less. And that's exactly what you've seen, with AMD here, okay? So, for AMD, these numbers are not good. You know, for Intel, this might be the best quarter they ever had, okay? For Intel, this would be like amazing. For AMD, this is garbage. Straight garbage, okay? But like I said, for Intel, they would take this quarter in a heartbeat. They'd be like, oh my gosh, we're the greatest company in the history of mankind. But what's really important about AMD is where the guidance is at. For the first quarter of 2023, AMD expects revenue to be approximately $5.3 billion, plus or minus $300 million. That's a decrease of approximately 10% year over year. So that's a bad number, but it's not a disastrous number once again. 10% down, you kind of understand it. That goes into the slight recession category, right? It doesn't go into, you mean, if AMD was talking about 20% revenues down or 25%, then you're talking about, okay, we're in a disastrous economy. This is like end of the world type stuff, right? This is like great financial crisis. But 10%, that's more of a slight recession. No, what's important about this is looking at what analysts had for numbers. So analysts had them having revenue go down about 7% for this coming quarter. So AMD is expecting to have revenue be less, okay? Now we'll see what happens on the conference call, and I'll listen to the conference call likely tonight, okay? But I think this is just very, very important for all folks to understand. Like AMD's reporting that next quarter is going to be worse than analysts expected, right? And that matters in some sort of way. And so I'm not surprised. I'm kind of surprised, actually, the stock's not down after hours, considering they came in with, 3 percentage points is not a small amount to come in as far as a revenue miss for the upcoming quarter. So I don't know. Well, we'll see kind of what happens. The stock's obviously heavy beaten down, and we know AMD is the type of stock that investors, Wall Street, they want to own this stock. We know it's one of the companies that has executed the best over the past 5 to 7 years, right? And so there's some sort of like love there, right? To get back in this baby and to buy it, right? And I'm even interested in AMD, but I'm not necessarily buying it tomorrow or something like that, unless maybe it goes down a bunch. Then I might be intrigued, right? Now, for the next 48 hours is huge, right? Because we got the two big dog days coming. Tomorrow, obviously, Jay Powell's coming out and talking. The Fed's going to make their decision, which is expected to be 25 basis points. Meta's reporting earnings, okay? Then, obviously, the next day is everything, because you got, $4 trillion of market cap all reporting within 15 minutes. Amazon, Apple, Google, McDougal. So that's absolutely massive. Something I love to see, okay? I was on Honest's IG page. Look at this, okay? They're celebrating the Lunar New Year at the Honest headquarters. Look at this, man. They got some catered egg rolls and some juice here, man. I like that. Honest, good job. Good job. You're not blowing the budget on this, okay? This looks like, I'm going to estimate this is probably like, you guys probably spent $300 on the Lunar New Year. So congrats to you guys, okay? I probably spend more on my food and drink budget for my poker games, man. Holy smokers, that's no jokers. But good job, Honest. We need to save every penny we can right now. I appreciate everybody joining me as always. Thanks so much, guys. Thanks for being subscribed to the channel. Obviously, I'll keep you up to date. Tomorrow's a huge day, and Thursday's a huge day. Also, if you're looking to join us in the Patreon, see all the stocks I'm about to buy on Friday, then check out the pinned comment down there and make sure you enter in the giveaway opportunity, and have a great day.